What is MFRS 8? MFRS 8, or Malaysian Financial Reporting Standard 8, deals with operating segments. It tells companies how to identify, measure, and disclose information about their different business segments so that financial statement users can better understand how the business operates and performs. This standard is aligned with IFRS 8. According to paragraph 5, an operating segment is a component of an entity that, first, earns revenues and incurs expenses. Second, has results reviewed regularly by the company's chief operating decision maker, which is CODM, and has discrete financial information available. In simpler terms, a segment is any part of the business whose performance is tracked separately by top management for decision making. For example, a manufacturing company may have separate segments for automotive, construction, and packaging aluminium products. In another example for the Petronas which is have downstream, upstream, and gas. CODM. What is CODM? CODM is a chief operating decision maker, refers to the key function in an organization responsible for making important operational decisions. CODM does not need to be a specific person. What matters most is the responsibility and authority held by that person or group. The CODM is responsible to, first, allocate resources such as budget, staff, and asset to different business segments. Second, monitor and assess performance of each operating segment. Third, evaluate risks and opportunities with the business. And lastly, make strategic decisions to ensure a segment to achieve the company's goal. In different organizations, the CODM can vary depending on the structure of the entity. It may be the CEO, the Chief Executive Officer, the COO, the Chief Operating Officer, a group of senior management, and lastly, the Board of Directors. The title is not important. What is important is that the identified person or group is actively involved in strategic decisions about the company segments and performance. In Petronas, the CODM function is carried out by the leadership team. For example, the President and Group Chief Executive Officer, YM Tan Sri Tengku Muhammad Taufik, Tengku Kamat Chaja Aziz, together with the Executive Vice President, who allocate capital and other resources across upstream, downstream, gas, and maritime businesses. They review segment performance, decide where to invest, expand or exit, and thus fulfill the role of CODM. In summary, CODM is about the decision-making role, not the position or job title. The first example of a CODM is in Tenaga Nasional Berhad TNB, where Datuk Megat Jalaluddin bin Megat Hassan, as the President and Chief Executive Officer, is responsible for making key operational decisions, evaluating segment performance, and determining resource allocation throughout the organizations. The second example is in Maybank Group, where Datuk Sri Khairul Salih Ramli, as the President and Group COO, leads the decision-making process for the company's operating segments, review their performance, and ensure that resources are distributed strategically. Both leaders act as CODM because they have the highest authority in managing and assessing the operating segments in their respective companies.
Next is the type of segmental report used in financial reporting. There are two types of segmental report. First is information, also known as operating segment. This disclosure shows the group's financial performance based on the different types of business activities it operates. As shown at the picture, the group is divided into several segments, which is upstream, gas, downstream, and corporate and others, each representing a distinct line of operations with different risks and return. In this section, third parties refers to revenue earned from external customers, while inter-segment refers to transaction between the group's own segments, such as when the upstream segment sells crude oil to the downstream segment for further processing. The table therefore reflects how much revenue and profit each business segment contributes to the group before eliminating internal transaction. Second is geographical segment information, which includes revenue based on the location of customers rather than the type of business. This section includes two main parts: the product and services information, which break down revenue by type of product sold, such as petroleum product, crude oil, liquefied natural gas, and petrochemical, and the geographical information, which report where the group's customers are located, for example, in Asia, Malaysia, Africa, and the rest of the world. This indicates that the group's products are sold to customers across multiple regions.
Hi guys, today I will be discussing about question 4, part 1. The question is about the key benefit of segmental reporting related to Petronas Berhad. The first key benefit is to enhance the performance transparency, which means it helps the company to identify which business segment are performing well and driving profitability. The second benefit is better risk assessment and decision making. It shows how business segment can face many risks and exposure to the market. So as you guys can see from the Petronas case, it's allowed the Petronas to see how different parts of business in the company perform. which state that downstream group record highest revenue, that reflecting the sales volume stronger more than any segment. And for the profit, it shows the upstream and gas segment is the highest, showing these are the most profitability areas in the company. Because of this benefit, investor can pinpoint which area that drive profitability to helping them evaluate the management performance more properly. For the second benefit, it shows each segment face different risks at different time. Firstly is upstream segment, which the activity that include the oil and natural gas, they are facing the unique risk, which is they are sensitive to the crude oil price and exposure costs. Secondly, for the gas segment, it is the activity that include the purchase of natural gas from upstream, liquefaction and processing of natural gas. This segment give benefit to the long-term supply contract that giving stable return to the company. Lastly, for the downstream segment, activity that include the supply and training for the company manufacturing petroleum and petrochemical products. This segment depends heavily on refining margins and market demand. The benefit of these three is user can assess where the company is exposed to volatility and where is the stable income source come, so that can improve the capital allocation and investment decision for the company itself. In summary, the segmental reporting under MFRS 8 is they provide the performance clarity and risk visibility that show the detailed insight into which operation are most efficiency and better understanding the company exposure to the changing market. That's all from now. Thank you.
Next, what is MFRS 134? MFRS 134 is the Malaysian Financial Reporting Standard for interim financial reporting. It provides guidance on how companies should prepare and present their interim reports, which are usually done quarterly. According to Bursa Malaysia, all companies whose debt or equity securities are publicly traded must publish interim financial reports. It specifies the minimum content that should be included in the interim report, such as the required disclosure, and it also identifies the recognition and measurement principles that must be applied consistently with the annual financial statement. It is issued for a period shorter than a full financial year. For example, it can be done quarterly and half yearly. This is important because it helps investors and other users to get more timely and reliable information about the company's performance instead of waiting until the end of the year. The purpose of MFRS 134 is to enable users to evaluate an entity's financial position, performance, and cash flow on a continuous basis throughout the year. The interim financial report can either be a complete set of financial statements or just a condensed set in its interim report, depending on the company's reporting policy or regulatory requirements.
So now let's look into the detail, the two significant events and transactions that affect entities' financial position and performance since the end of the last annual reporting period. The first significant event is the declaration of 32 billion ringgit dividend. On 14 March 2024, the Board of Directors declared a dividend of 320,000 ringgit per ordinary share amounting to a total of 32 billion ringgit. This information can be found in the Directors' Report on page 2 and note 29 on page 102 of the financial statements. The dividend will be recognized in the financial year ending 31st December 2024 as an appropriation of retained profits. From a financial standpoint, this event reduces retained earnings and impacts equity in the following year. It also results in a substantial cash outflow, reflecting the company's strong liquidity and profitability. The declaration demonstrates Petronas' continued ability to generate robust earnings and return significant value to its sole shareholder, which is the Government of Malaysia. The second significant event is the planned divestment of Agent Limited. On 7 February 2023, Petronas through its wholly owned subsidiary Petronas Marketing International Sdn Bhd signed a sale and purchase agreement with Vital Africa for the sale of its 74% equity interest in Agent Limited and its subsidiary. This transaction is disclosed in Note 17 on page 82 of the financial statement under Asset and Liabilities, classified as held for sale and discontinuing operations. The divestment was classified as a disposal group held for sale as at 31st December 2023 and completion as expected in 2024 pending regulatory approval. This transaction will significantly impact Petronas' asset base, revenue contributions, and regional exposure in Africa once completed. It forms part of group portfolio optimization strategy, allowing Petronas to reallocate resources toward higher value and strategic investment. This divestment represents a major step in Petronas' long-term transformation and capital efficiency efforts. Next, we look into for comparison purpose in this interim reporting period is for every statement, we compare with current year, which is 1 January 2024 until 30th June 2024, and comparative year, which is 1 January 2023 until 30th June 2023. This means that the company reports its performance and financial positions for the first 6 months of 2024. Here, we can notice that for the statement of financial position, the comparison is slightly different. It compares 30th June 2024 with 31st December 2023. This is because the statement of financial position represents a snapshot of the company's asset, liabilities, and equity at a specific date, not over a period. The interim reporting period ensures that financial information is timely, comparable, and relevant for users such as investors and management. It allows them to assess the company's financial performance and positions halfway through the year rather than waiting for the full year report.